this week from the signs of moderating inflation, reducing concerns about the imminent paring back of the Federal Reserve stimulus. But the Kansas City Fed President Esther George said the central bank does now need to move ahead with tapering.
Now, with the recovery well underway, transition from that extraordinary monetary policy accommodation to more neutral settings must follow. So today's tight economy, as I described earlier, does not call for tight monetary policy, to be clear. But I think it does signal that the time has come to dial back the settings.
We got more with the Chief Economic Advisor for Alphabook, Martin Malone.
I think basically these are all very, very good arguments. And, this is a very different situation than where we were last year. We want higher growth, we have it. We want higher inflation, we have it. Both of them have to be managed. Fiscal policy is going to manage the growth outlook, and monetary policy is going to manage the inflation outlook. So we have policymakers active, and we have significant growth and inflation levels. We just have to figure out where they're going to go over the next 1 to 4 quarters.
Okay, so let's break some of this apart, Martin, because what caught my eye was Esther George says, we should move towards taper. Kaplan, again, agreeing, but Kaplan looking for, taper now will give us more ability to be a little bit more tempered in the hiking cycle when it comes. And Esther George echoing that bifurcation between taper and the scale of hikes when they come is something which I think is a growing narrative. Do you?
Yes, so I would agree. Basically, it's whether you want to put the cart before the horse. The Fed is underwriting a significant amount of U.S. bonds. And the Fed, unfortunately, they're not going to be able to take a flyer on fiscal policy. So we can see that basically Washington and Congress is extremely active on fiscal. Will it be 1 trillion? Will it be 5 trillion? When will it be passed? When will it not? The Fed will not bet on those outcomes. They will wait to see the legislative outcome on fiscal. And there is a tenuous issue between dramatic levels of fiscal policy and inflation levels. It's an academic debate that is never ending. So the Fed is going to have to wait until they see what the size of the fiscal packages are going to be. They're multi-year fiscal packages. There will be a large amount of tax changes, if we call it a minestrone soup of tax changes, to fund these future fiscal packages. So the fiscal arrangements are going to be a critical input into the medium-term outlook for Fed policy. And they're looking at policy for 2 to 3 years, not for the rest of this year.
So, as you say, the Fed may need to wait and see the actuality of the fiscal plan. You talk about the 6 days, that changed the bond market. Not so much change, but mirror image what happened in the first quarter. You say we went from 112 to 137. You say it was mimicking the start of the year. I want to know what you think drove that, whether it was the taper agenda, which has been very clearly narrated by the Fed speakers, or was it fiscal angst, or was it just something else in regards to the balances at the Treasury? What do you think drove that repricing? Will it continue, and where will the destination be on 10s?
So we've always stated for years that the level of the 10-year interest rate is most critical, and right here we're around 1.3. You saw earlier this year we had a 1% yield starting off this year. We got to 175. That was the Q1 trade, and we then went sideways for almost most of the spring, and then we had this technical rally during the summer, and that was basically the balance sheets, all the relative balance sheets that we have that are involved in that particular interest rate. Let's flip it the other way. If the interest rate in the US was to rally below 1%, we would get quite concerned and actually potentially negative on stocks, because it would show potentially negative economic outcomes. We actually want a slightly higher yield. We prefer that it's not 2 or increase in the yield. And this is sort of where the Fed is trying to sort of figure out how to actually manage the situation. We don't want 50 basis points in a week, but 5 basis points in a week, maybe 10 on a taper or 20 on a taper. But that is going to be managed very, very, very importantly. And all Fed meetings are live. So the September 21st meeting will be a live meeting on taper.
Remember, you can